All right, guys. So, finishing another awesome day of trading from New York City. I'm finishing the morning up $3,931.93. Traded three stocks and obviously did really well on MTBC and then lost money both long and short on AA or ARRY. I probably wouldn't have been as aggressive on ARRY if I didn't already have a big cushion from MTBC, but I got in ARRY first with 5,000 shares, stopped out for like a 1 cent loss, and then flipped short with 5,000 shares and stopped out with a 13-cent loss. So, I probably could have sized down a little bit on that. I think I was being a little more aggressive. I really thought I had the right idea on it, but it didn't. But MTBC was fantastic, $4,800 in profit, and I was thinking that today, with one trade being up 4,800 bucks, that today had the potential to be a, you know, five, seven, $8,000 day. I just needed that second trade, that second really good opportunity, and uh, we didn't get it, or at least we haven't gotten it yet. And it's 11 a.m., so the further we get away from the bell and the closer we come into lunchtime, trading kind of slows down. So rather than try to push it really, really hard, I think I'm just going to be happy with $4,000 profit. I'm still trying to kind of rebuild, from just a little bit of the rough month of April. Obviously, April was just choppy; it wasn't very clean, and my goal is just sort of rather than like the last 4 days have been good, and I made like $7,000 or whatever, but I didn't want to have a day where I had a big drop because I got too aggressive. So I just want to keep going steady, steady, steady up. And when we see good opportunities like we saw today on MTBC, I'll be a little more aggressive. So today on MTBC, this one we found on our gap scanner. It was our leading gapper. It was the second highest gapper, gapping up with news of good earnings overnight. So when we saw this pre-market, I was like, okay, well, I like it long over the pre-market high, and that was at this point here where the pre-market high was 246. But just before the bell rang, we got this sort of squeeze all the way up to what was it, 270, and then all the way up to 284. So I was kind of like, I don't, or yeah, it was pre-market high was 270. So I was kind of like, all right, well, now I'm nervous that it's going to be too extended. The bell's going to ring, it's going to roll over. So I've just got to kind of wait. And what I decided to do was wait a little bit instead of jumping in immediately as the market opened, which I often tend to do on these. I decided to wait just a little bit. And I waited until it showed me some real strength. We popped up to a high of 3. We got a little 1-minute micro pullback right here at 3. And as we broke over 3, that's when I got in with 5,000 shares. So 5,000 shares in at 3. And we pretty much immediately popped up to a high of 350 and then up to 360. And as we broke over 365, I thought at that point this was going to go to $4. So I was like, you know what? I'll just add another 5,000 shares at 365. And if it drops down to 355, I'll stop out. And I'll be risking a little bit, risking 500 bucks basically. But the potential is that it could go to $4 or 420, which is going to add another $2,500 to my profit. We popped up to a high of 84 and we kind of hesitated there, and then I sold the whole thing at 370. So with 10,000 shares from like a 325 average, I made about 40 cents per share. So 4,000. That first trade was $4,000, and then I got back in it for this second trade over this level here in at 364, popped up to 377, but then we pulled back, and so obviously that one didn't hold up as well. So it was still a winner, it just didn't hold, and since then it's been selling off. So an awesome trade right out of the gates, gap and go setup. So this stock had everything we look for. Number one, it's a former runner, has a history of making big moves. Number two, it was gapping up with a catalyst. It had news. Number three, it had a low float. Number four, all the traders were watching it because it was the leading gapper. It was the obvious trade. So I jumped in and rode the momentum, made $4,800. So that'll do, right? That's a great day. Now, when we have a really good move like MTBC, what's really common is that we'll see kind of like sympathy momentum. So the next stock that starts to pop up on the scanner, it'll start to squeeze, and traders sort of that feeding frenzy that's on MTBC switches over to the next one, whatever it might be. And that didn't happen today. I would have needed that to happen in order to have a $10,000 day. $4,800 winner on this one, and then 3,000 on a second one, and maybe 3,000 on a third one, and that would get me, up to 10, 11,000. That's very possible. It just didn't happen today. So in any case, the next trade I took was ARRY. And on this one, we had this kind of a funny one because we had this little 5-minute setup right here. But I was like, well, I'm a little iffy about it because it's extended off the 9 moving average. The best, the best pullbacks pull back right to the 9 moving average and then move off that level. So the fact that this was as extended as it was made me a little nervous. But I said, you know what, I'll take a stab, and I got in with 5,000 shares at 377. It popped up to, let's see, I'll show you on the 1-minute chart. I got in at 77, and it popped up first to, where am I? It popped up to 80, and then it just seemed heavy. So I sold, I got out, took a small loss, lost 30 bucks on it, and I flipped short because I thought this was going to do a false breakout, kind of like the false breakout we saw in MTBC where we popped up and then we came down quickly. But what ended up happening is we came down and I shorted it, and then we just curled and we moved back up to the highs. So I had to stop out, and I kept my tight stop, 13 cents, 10 cents, and then 3 cents of slippage. So kept a tight stop on that, which is totally fine. But I tried it long, I tried it short, didn't really do well on either side. So at that point, I was like, all right, well, I'm still up 3,900 bucks. I don't really want to give back any more profit unless there's a really, really good setup that's worth taking. And since then, I haven't seen anything that's been worth taking. So I've just been sitting tight. And I think that that's definitely the smart thing to do right now. My goal is to just have, just to try to be consistent, to just sort of rebuild. Sorry, I got an incoming call. Just to be consistent, to try to rebuild this account that, I obviously took out $70,000. So I went from 100 down to 30,000. And now I'm kind of building it back up. So my first target is $50,000 and in account balance. So this morning I opened at 37,800. So plus the 4,000. Tomorrow I'll open just under 42,000, and getting closer to that 50K mark. And once I hit 50K, I will have made back the loss that I had from the 2 kind of slow weeks or red weeks I had in April, where I lost like 15 grand. So I lost 15 grand, and now I'm trying to rebuild. Now, I saw a trader comment that in April I had a massive loss, which was not the case at all. I did really, really well in January, February, and March. I took $583 and turned it into $125,000. But then I lost about 15 or 17,000. So losing 15 or 17,000 put me down 4,000 on the month of April, because in the first week I made whatever it was, 15,000 or 10,000, and then I lost 15. So that's, yeah, I mean, it was a loss, and it was over the course of 3 weeks of, kind of small losses. It was kind of a choppy market, but relative to going from 500 to 100K, that pullback is completely calculated. It's calculated, it's measured, it's not beyond the risk tolerance that I have or that most traders would have. It's acceptable to go from 100K down to 90 or down to 85, and then build back up through 100 and up to 110, 120, 140, 150, and then drop down to 135, and then back up to 150, 60, 70, 80, 90. down to 75. I mean, those are the common ups and downs that every trader is going to experience. So you just have to know that about the market, and you have to prepare yourself that you're going to have some incredible hot streaks, and then you're going to have some, some slow days. So today was an awesome day. The last 5 days have been really solid. I think in the last 5 days, I've made about $12,000. So, that's pretty solid. I'm definitely happy with that. It's helping me build my cushion on the month of May, and I'm hoping that we continue to see some really good opportunities this month, right? It seems like momentum's coming back into the market, so definitely want to capitalize on these opportunities, knowing that by being aggressive on these trades, that it'll help tide me over during, an inevitable slow period that might come. I don't know when the next one will be. Maybe it won't be till the fall, but it'll be inevitable. So definitely know when to put the pedal to the metal, be aggressive, try to get those gains, and those are the times it is okay to increase your share size. And then when the market is slow and choppy and you're not seeing big opportunities, that's the time to step back, slow down the share size. Now, I don't like to walk away from the market completely because I like to always know what's moving, how the market's working, how things are trading. So I just reduce my share size, and then, I'll amp it back up. So it's that ability to, kind of throttle up or down based on how the market's performing. All right, so that's it for today. Today's day 88, 88th trading day of the year, and one of the best days here so far of the month. So I hope that this is a good sign of what will hopefully be a really strong month of May. Okay, so that's it for now. I'll see you guys in a little bit.
Let's be honest. If you made it this far, you must have really enjoyed that video. So what's stopping you? Subscribe right here and get email alerts anytime I upload new content. Until then, happy surfing!